Assalamu alaikum. My name is Arsalan Khan and I am your accounts teacher. The subject that we'll study together is accounting, and its code is 7707 in the O levels. This is the first time that we are studying this subject. It is not like science or maths or Urdu or English that we have already covered in the previous classes. This is the very first time that we will be studying something by the name of accounting. Okay, right. Let me inform you of the book that we will be referring to. It will be Frank Wood's Business Accounting, 13th edition. This is actually the latest edition. The previous editions are also valid. However, there are a few changes that you'll have to notify according to the latest book. It's Frank Wood's Business Accounting 13th edition by Alan Sangster. This is the book that we will be referring to. Thank you. Let's move on to the next slide and let us find out about the syllabus that we will be covering in this session and the paper pattern of accounting. Thank you. Right, so let us have a look at the exam paper pattern in the O levels. There will be two papers for accounting exam, paper 1 and paper 2. In paper 1, which is a multiple choice questions paper, the duration for that paper will be 1 hour 15 minutes. That means this paper will last for 1 hour 15 minutes. The time given for that is 1 hour 15 minutes, where you'll have to do all 35 questions, each carrying 1 mark. Multiple choice question, let me explain what is that. A question will be given where 4 options will be given to y'all, and you'll have to choose the correct option. Multiple choice is that. Okay, so 35 questions will be given to y'all that you'll have to do in 1 hour 15 minutes, each carrying equal marks, that is 1 mark each. And out of 100%, the weightage significance of this paper will be 30%. Now there is another paper, paper 2, the second paper that will be structured written paper. That means structured questions will be given in that paper, and the time duration for that paper will be 1 hour 45 minutes. This paper will last for 1 hour 45 minutes, where you will have to do 5 questions, each carrying 20 marks. Each question carrying 20 marks, so the total will be made up to 100 marks. The second paper will be of 100 marks, and out of 100%, the weightage for this paper will be 70%. Now, briefly summarizing the entire paper process, paper pattern, paper 1 will be of 35 marks and paper 2 will be of 100 marks. That means in total, altogether, a student will be doing a paper total of 135 marks, paper 1 and paper 2 altogether, where paper 1 will be weighing 30% and paper 2 will be weighing 70% out of the entire 100%. The duration is mentioned 1 hour 15 minutes for paper 1 and 1 hour 45 minutes for paper 2. 35 questions, each carrying 1 mark from paper 1, and 20 marks each will be given to all 5 questions in paper 2. I hope you all understand this pattern. Thank you very much. Let's move on to the next slide and have a look at the syllabus content that we will be covering in this session. Thank you. Now let us have a look at the syllabus content that we will be covering in this class. For midterm, I have chosen 5 topics. The first one will be Introduction to Accounting. double entry system, general journal, ledger accounts and trial balance. And as a final term, there will be cash book, purchase and returns journal, sales and returns journal, general journal, petty cash book and documents. All these 10 topics relate to the basics, and the reason to starting accounting in class 8 is that we work on the basics and we make our basics very, very strong and firm and concrete. So that will be a good effort on your part, inshallah, to be working on accounts since class 8, and these 10 topics will cover the entire basics, and inshallah by the end of class 8 you all will be ahead of any other account student of any other school, because they are starting it down later. They are starting it a bit later, that is in class 9. So you all will be hopefully ahead of any other student in any other school, inshallah. So this was your syllabus for class 8. Let's move on to the next slide and start off with the basic accounting. Thank you very much. Now let us understand the very word accounting. This is the first time that we all are studying accounting. This is the very first time that we are going to see what the subject means and what the subject says. This is a very easy and a comprehensive and an interesting subject, not only because I am teaching it out, I have studied it as well as a student. The word accounting, definition says a record of what is owned and what is owed. Now what does this mean now? A record of what is owned and what is owed. This is a wonderful definition of accounting, because the world of accounting is huge, is vast, and I don't think that it can be summarized in a simpler way than this. There are a lot of complexities. We have to make accounts and everything. All this is defined as a record of what is owned and what is owed. Let us have a look at the first part of this definition, a record of what is owned. Whatever is owned by us is in our ownership, and whatever we are answerable for, owed. Word O-W-E-O means whatever we have to give back or we are liable to give back, we are responsible for giving it back, we are answerable or accountable for it. That is known as owed. O-W-E-O or O-W-E-D, owed in the past tense. Whatever we have with us in our ownership and whatever we have to give, we have to pay back, we have to answer for, we are liable for. It is actually a record of that. It is a simple and a wonderful, beautiful definition of accounting, जिसको उर्दू में कहेंगे क्या आया क्या गया. Right. The next heading is, what is the difference between bookkeeping and accounting? Well, bookkeeping is a term that is related to accounting only. However, many differentiate it with accounting. So let us have a look at, let us understand what is actually the difference between bookkeeping and accounting. What is the difference between the two? Can they be used interchangeably or what? Many times they are used interchangeably, which is a bit wrong, because bookkeeping itself is something else and accounting itself is a vast, broader term that may include bookkeeping. However, it is quite different. Okay, let's move on to the next slide and let us have a look at the difference between the two. Thank you. The definition for bookkeeping says bookkeeping is the process of recording data relating to accounting transactions in the accounting books. Bookkeeping is the process of recording data relating to accounting transactions in the accounting books. It's just the process of recording data. Whatever the accounting transactions take place, we know how to record them properly in the books of accounts. That is called bookkeeping. Whereas, having a look at the definition of accounting, it says accounting is concerned with the uses which accountants might make of the bookkeeping information given to them. Actually, there is another definition, there is the previous definition that we looked at in the previous slide, and that said accounting is the record of what is owned and what is owed. It is summarizing the subject of accounts. That previous definition that we covered earlier was in the previous slide was covering the entire subject. It was actually covering the entire subject of accounts, whereas this part of accounting is specifically talking about the act of accounting. Okay, accounts banana jisko kehte hain. Accounting is concerned with the uses which accountants might make of the bookkeeping information given to them. These two terms are also used sometimes interchangeably. These two terms are also used sometimes interchangeably, which is quite wrong. Bookkeeping is a different act, and accounting is a different act. Bookkeeping means the process of recording data relating to accounting transactions in the accounting books. It's just a record. It's just a recording. It is to record, okay? Whereas accounting is concerned with the uses which accountants might make of the bookkeeping information given to them. How we actually use that information, that recorded information, that is particularly, specifically accounting. So basically accountants are the users of the recorded book kept information, and bookkeepers are the recorders of the information. However, both the tasks can be assigned to the same person. I hope we all understand this slide. Let us move on to the next slide, where we will see what are the categories of accounts. Thank you very much. Right now we will have a look at what are the categories of accounts. We will study the categories of accounts. In the basic accounting, why we study these categories of accounts? Because actually this is a small process. It's a small process. This small process is a part of a big process of learning how to make accounts. When we will study these categories of accounts, then we will understand the rules according to these categories, and then we will specifically be able to make accounts from different transactions. Right, the first category says real accounts. Now what are the real accounts? Real accounts are accounts of all assets. Example: cash, bank, motor vehicle, computer, etc. Now what is an asset? First of all, we have to understand what is an asset. Definitely we will understand what is an asset in later part of the course. However, it is needful to understand what is an asset over here as well, so that we may understand what are the real accounts. We will study assets in detail. However, here I would like to brief that an asset is something that is owned and controlled by the business entity. The business entity that we are talking about, it's the asset of the business will be anything owned and controlled by the business. One. Second, it is kept or used in the operations of the business for a certain period of time. This is the second point. And the third point is, it is used to generate revenue or income by the business entity by using it in its operations. By using it in its operations or by keeping it with the business, it is used to generate income or revenue by the business. Whenever these 3 points are fulfilled simultaneously, that is called an asset. Okay? So accounts of all assets, example cash, bank, motor vehicle, computer, etc. Accounts of all the assets are termed as real accounts. Number 2, personal accounts. Accounts of all persons and organizations by name, example YM Co Limited, XYZ Bros Limited, Mr. Vakar, etc. These are accounts of all the persons and the organizations by name. Account of YM Co Limited or XYZ Bros Limited, Mr. Vakar, or the accounts of other companies and persons will be categorized as personal accounts. I hope we all understand this slide, these two definitions thoroughly. Thank you very much. Let's move on to the next slide. Third is nominal accounts. Accounts of all profits, gains, and all losses, expenses, example sales, purchases, salaries, discounts, etc. All the gains and profits and all the losses and expenses, what we earned and what we incurred as an expense, क्या कमा रहे हैं और क्या खर्च कर रहे हैं, all these accounts are categorized in one category by the name of nominal accounts. Examples are given as sales, we are earning revenue; purchases, we are purchasing goods and services; salaries, we are paying off to our employees; discounts, we are giving and we are receiving, both income and expense; and there are many more. Direct and indirect expenses, incomes, all incomes and all expenses are going to fall in this nominal accounts category. Fourth, the last, not the least, category is of temporary accounts. Most people don't talk about this category much. Temporary accounts, in this category, accounts are made for a certain purpose and not carried in the books from one period to another. Example, disposal account, suspense account, etc. Now let me explain what these accounts signify. We can just understand through the definition and we cannot go into the depth. Why? Because these accounts will be made in somewhere around class 9 and 10. Only then you will understand the true purpose of these accounts and the true meaning of the temporary accounts. However, as of now, you can just understand as per definition what are temporary accounts. These are the accounts which are made for a certain purpose and they are finished. Their balance is not carried from one period to another. In the other accounts, mostly balances are carried from one period to another. For example, at the closure of one accounting period, whatever the balance was, that will be the opening balance of that same account in the next period. I am just explaining it. However, we will have a look, we will understand, and we will learn how to balance off the accounts, and we will understand balancing of the accounts later in detail. So temporary accounts are accounts that are made for a certain purpose, and when that purpose is achieved, these accounts are closed off and they are not carried from one period to another. The balance is not carried. Thank you very much. I hope you all understand the slide. Let's move on to the next slide. Right, now let's have a look in detail at what an asset is. An asset is a resource. By the word resource, we should already understand that it's something that is used in further production. Resource is something that is used in producing further. So if we say that an asset is a resource, that means an asset is something that is used to produce further goods and services. Right? An asset is a resource that is owned and controlled by the entity. Entity is the business that we are talking about. Ownership and control is necessary in the first point, owned and controlled by the entity. An asset is kept and used in the operations of the business, and the asset is a resource that is used to generate income for business in the short and long run. In the short and long run. All these three points should be fulfilled simultaneously. Any one point will be missing, that particular object cannot be termed as an asset. Ownership and control, along with its usage in the operation, along with the fact that it is generating income for business in the short and long run, all points have to be there to fulfill the condition of being an asset for an object for the business. There is some discussion that relates to the asset further, and that is a distinction between a fixed asset, non-current asset, and a current asset. A non-current asset is owned and controlled by the entity and is kept and used in the operations of the business and generates income for the business for more than 1 year. It is able to fulfill all these 3 points for more than 1 year. It can be owned and controlled, it is kept and used in the operations of the business, and it generates income for more than 1 year. We can sell off a non-current asset as well before 1 year. However, the point is that the nature of the non-current asset is such that it is able to fulfill all these points for more than 1 year. Over the span of more than 1 year, that is 12 months. And the current asset is the asset that is convertible to cash, that has to be converted to cash, that is convertible to cash. According to its nature, it is convertible to cash within 1 year. All 3 definitions are fulfilled on that too. However, they are fulfilled for a period, for a span of less than 1 year. That means a current asset is owned and controlled by the entity and is kept and used in the operations of the business and generates income. All these 3 conditions are fulfilled for less than 1 year. The nature of the current asset is such that these 3 conditions will be fulfilled on that asset for less than 1 year. If we stretch that to more than 1 year, it will not serve the purpose. However, this was just a brief introduction of the distinction between the current asset and the non-current asset. However, we will go into further detail and full explanation in the later classes, and I will present the difference between the current asset and the non-current asset on a slide as well. I hope you all understand what an asset is. Here we finish off the lectures for the first class. I hope we have all enjoyed and understood studying accounts. Thank you very much.